Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 14th, 2017. So first of all, I wanted to mention that I have a VIP membership interest list that's forming, and you can sign up for this membership, future membership at MasterChartsTrading.com. So here's the link. If you go to MasterChartsTrading VIP interest list forming, just click on this link. Additionally, it's also on the blog page, and on the blog page it's right there. Now, I have my regular trade alert services, and we have subscribers who are actually volunteered to do some beta testing, so those subscribers, please stay tuned. But this VIP service is going to be more aggressive, and we're going to be using more aggressive, stronger, highly popular kind of ETFs and stocks that are, kind of hot stocks, I guess is the word. So stay tuned for that, and do sign up for that trial, or not trial, but just a interest list that's forming right now. So that's that. I'm estimating that I'm gonna go live with this in September. I'll show some examples that I'm doing currently with this VIP method, and I think they're doing pretty good. So anyways, let's get back to our normal scheduling, and we're seeing normally scheduled fresh all-time highs in stocks. There's some mild divergences remain, but I think they're being worked off. QQQ is approaching all-time highs again. Biotech, semiconductor, social media, software, all participating in the advance. We'll look at solar ETF 10 as it approaches 52-week highs as well. Junk bonds also at fresh record highs. I think this is confirming bullish posture for stocks. The investment grade bonds are probably not yet done bottoming, so we'll look at those as well. US dollar is continuing below November lows. This is definitely helping gold, and we'll look at that. Maybe it's put in a bear trap. Also, oil gained for the week, and XLE follows suit, and I still am not comfortable shorting oil just yet. And we'll see a look at natural gas, which had a pretty good week this week. So first I wanted to show a couple of trades that I actually still have a position open for this new VIP method that I'm going to be implementing, and the membership will be hopefully soon available. So here's one trade that I still have a position open in this stock. This is Chemours. And I entered down here on June 16th. Actually, the entry was even better. Let me show you a screenshot from my Robinhood entry. So that was average cost 36.33, and so I entered like right there. Notice that the trade did not go my way immediately. I held on. I did not exit below a recent swing low, which is a common mistake actually. And now I have 3 targets that are met, and I'm still trailing it because it looks like we could continue higher. Here's another trade that I did for Cenex Century Aluminum. Same thing. I entered here June 16th, and here's my entry for Cenex at $14.36. Plus 16% currently, and for Chemours plus 23% currently. So both pretty decent trades. Again, same thing here. I entered June 16th, but trade went against me. I held on here, and stock rallied. First target, second target, third target, and I'm still trailing it down below. So this is a kind of good example of what the trades will look like. More aggressive, faster trades. Versus a regular kind of longer term swings. This is going to be kind of like a mini swing trades, so they're coming up. Okay, let's go on to our S&P 500 ETF SPY. All-time highs, all-time closing highs. Very strong. Stock market is very strong, very bullish. very little to worry about in a sense of technical picture for this uh, um, market. Now, notice that advanced decline volume line made a high here back in March, and so far it has not done so until just recently. So notice that we are at 85.3, we were at 85.5 thousand, and we are very close to making fresh high in advanced decline volume line. Now again, how much should we worry about it? Probably not that much, because usually when true top-in pattern happen, we see a divergences both in advanced decline and advanced decline volume. I'm not seeing a divergence in advanced decline line because it just made a fresh high. So overall, I think this is a very bullish chart, and I think we will continue. Well, I mean, we could still see a pause, obviously, of some sort, maybe a sideways consolidation, but I think fresh highs are more likely than a reversal here. So here's actually a recent trade that we still have open at MasterChartsTrading.com, and the entry was sent out to my subscribers here March 28th. Notice that I send out a sample size for the, 100, if you're risking $100 basically. And notice that we have first target, second target, fresh all-time highs, and we're still trailing for this one. Dow Jones Industrial Average, also fresh highs, fresh all-time closing highs. Advanced decline line, fresh all-time highs. Again, notice that advanced decline volume did not yet hit fresh highs, but I think it's not that far off, so we could see a confirmation. Again, I don't know how much to worry about this divergence. I'm not a big worrier about this. Here's my position, Dow Jones Industrial Average. I opened myself here April 13th. First target, sold half here. Second target, now all-time highs. I'm still trailing the remainder of my position. So this just shows that, I'm not just sending out alerts. I'm actually trading myself together with my subscribers. S&P 500, this chart shows a little bit of, I'm not sure how much to worry about. Basically, we made a fresh high here in March. The bullish percent index and the percent of stocks above 200 were very high here, around 80. Now we're making fresh highs on very slightly lower numbers, but this is I think, very minor divergence. So I'm not sure how much to worry about it, and actually I don't worry about it too much. Here's S&P 500 on the weekly time frame. I think this is a beautiful chart. We had two triangle consolidations here, and the way I know it's triangle is because these are inside wicks. So this week is within the previous week, this week is within the previous week. Now the first triangle consolidation did not result in a breakout, and also it did not result in any breakdowns. So now we have a second triangle consolidation, and now we have a bullish breakout to fresh highs and a very bullish looking candle here. So I think we could continue higher. Notice that previous triangle consolidations resulted in bullish breakouts. QQQ, the Nasdaq 100. Now, if you listen to my previous videos here in June, I pointed out this enormous volume here, and for QQQ, this is quite a reliable indicator. When the volume is this high, there is a strong chance that QQQ has already bottomed. So we basically did that. We bottomed in this 137, 136 area, and we rallied off of it. And I think this is a successful test of previous support, and we had support in this area, 136, 135, 137. We pretty much successfully tested it. Now we have a surge, and QQQ is moving higher. I think this is definitely a bullish chart. More choppy than the S&P, but still quite bullish. Here's QQQ on a weekly time frame, and this is why I repeatedly tell my subscribers and any new traders to avoid shorting clearly bullish securities. When you see fresh 52-week highs, in my opinion, you should avoid shorting them. Notice that we have two, count not one but two bearish engulfing patterns on a weekly time frame, and this is, obviously we pay more attention to a higher time frame, in this case weekly time frame. Notice both of them did not result in anything. You see a bearish engulfing, you have like a couple of cents follow through to the downside, a bearish engulfing, a little bit of follow through to the downside, and now a surge. So most likely all-time highs are going to follow. This is not something you want to try to do. You do not want to short this. If you want to short something, look for another security that is, next to 52-week lows. And let me think about a security that's next to 52-week lows. Let's say Kroger. So these are 52-week lows. And there were 52-week lows back here as well. For example, back in, these are 52-week lows right here in September of last year. So this bounce right here, that's a great opportunity to short, like right there, for example. Now, and then fresh lows, another feeble bounce, another surge, drop lower. But with QQQ, it's the opposite. You're getting fresh highs, a slight pullback, and then fresh highs again. So, I don't know. Do not short bullish securities. I don't know how much more clear can I get. QQQ is being helped, of course, by biotech, XBI. This is a 52-week highs, very mild pullback. This could be like a flag. We have a surge, and now we have a flag body, and of course, a breakout would call for a significant move higher. Notice that, relatively speaking, this is SCTR for XBI. We have very strong security. It is now in top 10% of all non-leveraged, non-inverse ETFs. So more highs are likely. SMH, semiconductors, also very strong security, also moving higher. Notice that the pattern is quite similar to QQQ. Social media. This is weekly chart, fresh 52-week high, but this probably are all-time highs. Also very strong, and it's part of QQQ. And of course, software index as well, also very close to fresh all-time high. So any one of those, you should, if you're a new trader especially, avoid shorting them. Instead, look for bottoming pattern. Look for bottoming pattern, then go long. Here's 10 solar, and this is approaching 52-week highs. We're very close to 52-week highs, and I actually started, looking into 10 a little bit while back because I thought that we bottomed out, and now we're very close to 52-week highs, and this is good. Notice that 10 came down very hard. These are all-time lows. So there is a lot of room to run to the upside if this is indeed a fresh bull market for 10, a solar ETF. In fact, here's my trade, 2 trades, and I'm not claiming that I have a 100% success rate. Obviously, nobody does. But currently, the market is easier than it was in a majority of 2016, and most of the trades work out. So I have over 70% success rate currently. Notice that this trade here failed, and I had to exit. But then I went ahead and I re-entered on the long side here on March 28th. First target sold half, then we have all 3 targets that I'm still trailing on my remainder, and we have fresh highs for the move. And I think this will continue, maybe following a shallow pullback. So if you have a chance, sign up at MasterChartsTrading.com. And you will, you'll be receiving MasterChartsTrading.com. You'll be receiving similar alerts. Finally, here is New York Stock Exchange Composite, probably as wide of a diverse of a benchmark as you can get. Here what I wanted to show, that advanced decline line for New York Stock Exchange Composite is at fresh all-time highs, but the advanced decline volume line is not yet there, but we're so close. We're at 20,000.5. Previous high was at 20,000.9. So again, I'm not sure how much to worry about this mild divergence, and I think pretty much we are in a bull market, no ifs, ands, or buts about it. Junk bonds on a daily time frame here. So why do I care about junk bonds? The reason why we care about junk bonds is because junk bonds and S&P 500 have a very high degree of correlation. So in other words, they move in lockstep. When one moves up, the other one moves up as well. And when one moves up, and when we make a fresh high here in the junk bonds JNK together with S&P 500, generally speaking, in my opinion, this is a very good sign. And it's showing that S&P 500 stocks most likely are going to continue higher. There are no divergences that I'm aware of right now. Sometimes we see divergences when S&P makes a new high but junk bonds do not, then we start worrying about it. But right now I think we are pretty clearly bullish. And here's junk bonds again, all-time highs right there with a very bullish candlestick and a fresh all-time highs close. So again, correlation is high to the S&P 500, and I think we could continue higher still. Here's bonds, the investment grade bonds, treasuries, 20+ year treasury bond fund. We had a pretty hard, we came down relatively hard here from 2017 highs, tried to bottom here and continued higher. Now I'm not yet convinced that we have worked off some of these conditions. I think we may need to have a little bit more bottoming. Here's the reason why I don't think we have bottomed, and this is this candle from this week. Yeah, we gained a little bit, but I just feel like it's not yet a very bullish candle. Here's a very bullish candle, a hammer candlestick. Here's another very bullish candle. This is a hollow black candle with a close near the end of the session, and in this case near the week's end. So right now I'm still kind of on the sidelines about bonds. Maybe they have bottomed, maybe not. But this is a weekly bearish engulfing right there with a confirmation. So we may need to see some... it needs to prove to me that this security needs to prove to me that it has indeed bottomed. And I don't think it has bottomed yet. LQD, I think, fared much better than TLT. This is a corporate bond fund. We had bottom here. This looks like two hammer candlesticks and then a surge. And weekly, if only the close was a little bit higher, I would have said, yeah, we definitely worked off this bearish engulfing, possible bearish engulfing here. But maybe we haven't. So let's wait and see how bonds play out near term. Okay, in the Forex universe, here is US dollar index on a daily time frame. So we had two support breaks here. One very recently, we had a support break, a rally towards broken support, and then rejection and a fresh low. So this looks like a bona fide support break here, and I am now leaning more and more towards the bearish camp for the US dollar. Mainly because we are seeing, we are approaching 52-week lows. This blue line right there, it shows where the 52-week lows are. And up until recently, I thought maybe this is a cup and handle, and maybe on the weekly time frame, maybe this was a big cup, and then we were trying to form a handle. But now we broke below November lows. There's November lows right here from 2016. And I am now more and more I'm less and less sure that we are now, in a bull market for dollar. One of the reasons is because the euro making a 52-week high, and it continues making 52-week high. So this is about, I think, 50% of dollar index is euro. So if euro is gaining, dollar is under pressure. British pound, also surprisingly, has recovered quite a bit of its losses from October lows, November lows, and now is approaching 52-week highs as well. These are 52-week highs right there. US dollar versus Japanese yen fared so far better, and I can still make a claim that US dollar is gaining versus Japanese yen, but this week was pretty bad for the US dollar overall, and actually yen has gained here. So so far, if I was to say that this is a bullish chart and this is a maybe a fallen flag, we need to see a breakout above, I don't know, 115.5 to confirm. But maybe we're getting to that area, but we're not having a breakout. So maybe US dollar is going to start losing versus Japanese yen as well. So overall, this is obviously having a negative effect on the dollar as it continues lower. Of course, weakness in the dollar is having a very positive effect on gold. And here is gold on a daily time frame. This is a continuous contract. Generally speaking, you can see correlation between US dollar and gold. They are usually negative. Over the past few weeks, there's been somewhat positive. Probably now it's going to be reversing back into a negative correlation. So this double top is still in play, and actually let's go to GLD. It's a little bit more obvious there. So there's still resistance up here at around 123, 125 area. Resistance is from previous broken support, a retest of that broken support, big rejection, and a fall lower. Now we have 2 times again that we touched that area at 123, 124. Now it's possible that we just experienced a bear trap for gold, and bear traps usually happen when we have a support break. So if we say that 115.56 was the line in the sand and the support, and kind of like a support, then we went below it. We actually closed below it right there last week. So what happens, shorts will short right there. The bears will short right there. So they shorted, but then what happened next week? We had a 2 very bullish looking candlesticks on daily time frame, and then we had a surge. So far this is looking like a bear trap, especially, well, obviously if we can continue higher. Now we will only know this in rear view mirror, obviously, but it is looking more and more like a bear trap. Here's a weekly time frame for gold, also looking like a very bullish candlestick here. The bullish attributes of this candlestick are: it's a hollow black candle. There is a buying pressure present because we see a longer wick out of the bottom than out of the top. And notice that also the close was next to the high of the wick, well, quite close. So overall, this is a bullish candle, and it's very possible that we have indeed bottomed already. GDX is a more volatile, obviously. On this chart, I wanted to show that actually GDX did not break below May low, and it kind of held on and then rallied here, while gold did. So overall, this I think is a little bit stronger than gold. On the weekly time frame, not a great candle, unfortunately, for this bullish engulfing. If the close was a little bit higher, I would be almost ecstatic. but we didn't. Also here we had a kind of triangle consolidation. We had an inside wick with a bearish resolution with a gap down. So here I was very worried last week if you listen to my previous video. Now looks like we're getting a bullish engulfing on the weekly time frame, so it's possible we will continue higher. On a daily time frame, we're still somewhat oversold, and this is also GDX on a daily time frame with a couple of my proprietary indicators. So here's one which I like to use, and this is a ITBM, intermediate term breadth momentum oscillator, which is basically a oscillator of the advanced decline line. So whenever this indicator is in the red, that means we're oversold, and vice versa. So right now I think we're oversold, and we're still kind of attempting to bottom. So there was another indicator here also, kind of like a oversold versus overbought indicator. Here we were at 0, and we rallied off of 0 again. So I think it's not a very strongly bullish chart, but still a bullish chart. So I would still not want to short it and only trade it on the long side. And of course we do trade it, and I open myself, MasterChartsTrading.com, I open this position itself myself. Okay, let's move on to hard commodities. Here's oil on a daily time frame. So oil is basically not really overbought enough for me to short it, and I don't want to be buying it because I think it's bearish. So it's sort of in between right now. Now if we see a further follow through to the upside, then I would consider it somewhat overbought, and then I'll look for a shorting opportunity. Here's West Texas on a weekly time frame. I still think this is a bearish chart for multiple reasons that I presented in the past. Right now, again, we are kind of rising. Maybe this is a rising wedge. Maybe this was a big drop, and now we're tracing out a rising wedge. If you like chart patterns, I'm not a big fan of them, but occasionally they do work. So maybe this is a rising wedge, and maybe I don't know, maybe we get to like $50. I think it will be probably overbought by then and ready to be shorted. Here's a weekly time frame for XLE. I showed this chart in the past, so notice this XLE just keeps dropping. We're basically at 52-week lows, approaching 52-week lows. What happened last time we approached 52-week lows? We touched them, we just continued making 52-week lows, bounced, and then made fresh 52-week lows. So we'll see where this goes, but I think the bigger trend is down. On a daily time frame, XLE is it just could not get any traction. Notice that 50-day moving average acted as a resistance here. Maybe finally we're getting some traction. Maybe we'll get to some overbought levels. Maybe we'll also short it once we get some, somewhat overbought. But in general, I would, if you only want to trade on the long side, then I would avoid it altogether. This is just a really weak chart. Notice the SCTR, this right there, Stock Charts Technical Rank, is at 5, so it's definitely in the bottom 10% of the ETFs. Okay, and let's look at natural gas. Here is a daily time frame, continuous contract, natural gas. I still think this is a bullish chart. It's very volatile, very violent. I repeatedly stress this to my subscribers that this is not for everybody. This is a very volatile security, and you, as a new trader, most likely want to just stay away from it. Anyways, notice this big gaps, up, down, a big run on the stops here. Notice that we closed below the recent low and then immediately rallied. So I would trade it on the long side still. I would not short this chart. Could I be wrong? Of course I could be wrong. Natural guess on a weekly time frame. That's the reason why I'm more bullish than bearish on this chart, because these are 52-week highs, and we just having basically a pullback from 52-week highs. Now, if we get to about $2.50, and then we break below there, then we could have a head and shoulders on our hands. And that's not a good sign. Alright, that's it for this week's recap. If you like what you're hearing, do hit the like button. It's right below. If you have any comments, please share them below as well. And of course, if you found this video valuable, please share it with others on Twitter, Facebook, or any other social network you think you have. Thanks for watching, and have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members, so that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right, thanks for watching, and please consider signing up for the trailer services. Bye-bye.